of Bloomberg government. Tom, the Israeli military is saying 1,000 rockets have been fired from the Palestinian enclave, and I think this has been described quite widely as some of the bloodiest battles we've seen at least since 2014.
Well, the markers are to go back 7 years, as you say, John, but really the markers to go back forever. And with the administration change, to me, the greatest mystery, and I'm looking at this as an amateur from a distance, but John, the greatest mystery for me is the relationship of the President of the United States with the Israeli government, with the turmoil there of the domestic election. I'm curious how that relationship frames out after what we saw with Trump and Netanyahu.
Would you be comfortable characterizing this as the first big foreign policy test of this administration?
In terms of smoke, bombs, pain, agony, and death, absolutely, John, but his card is full. His dance card is full worldwide.
You alluded to that headline that crossed a couple of minutes ago. It comes from Axios. President Biden weighing sending an envoy to Israel for de-escalation efforts. De-escalation, the call's coming from all sides at the moment, Tom.
It's coming from all sides. You know, the United Kingdom will weigh in. We've all seen the ballet before, but the number one ballet is to stop the carnage. And as you say, it's not a question of one shot here, one shot there. It seems like overnight there were many different fronts to this new war.
Yep, and as the headlines cross, we'll keep you on top of the news flow here at Bloomberg. From New York City, alongside Tom Keene, I'm Jonathan Ferro. It's the price action as we count you down to a CPI report in the United States of America. Equity futures 41.37 on the S&P 500, declining 0.2%. Let's call it a 0.25% lower. In the bond market, yields coming a full basis point now, 161.12 on a US 10-year. From New York, this is Bloomberg Surveillance.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
What a messy couple of days in this market. Some price action, looking for a narrative. You know how it works. Equity futures down about 10 on the S&P 500. We declined about 0.25%, 2 hours away from a CPI report in America. It is CPI Wednesday. Nasdaq 100 futures coming in about 0.5%. You're underperformance on the Russell right now, Tom. We're down 1 full percentage point. Let's get to the bond market. An upgrade from BMO on the S&P 500 from 42 to 4,500.
Yeah, Brian Belsky
doing
from
that. Brian. Upgrading energy too, Tom. We'll talk about energy a little bit later. 10-year yields right now, 161.12. Coming in about a basis point, about 233 on 30s, and about a basis point there as well. Some stability over the last couple of days after we gapped aggressively lower in Friday's session. Here's the story, though. The big debate right now in the United States and worldwide. We don't have a demand problem. We have a supply problem. And capturing that perfectly yesterday was this. Switch up the board. Job openings in America. 8.12 million from 7.5 in a previous month.
Nice chart. On
Tom,
radio, that's the most important chart. Job openings.
A record.
Yep.
It's a record. And the big debate right now is what will solve that gap between demand and supply. That chart's
John,
phenomenal.
I did some research yesterday on this. I was at McDonald's, and they made very clear to me they could serve more people. They're packed, and they're just starving for labor.
Yep, and I don't think they're alone, and I don't believe you were in McDonald's either. Were you really in McDonald's? Were you really? I'm not going to go with that. I don't believe you were there. I've seen you there once.
It's around the corner from Hermes.
I don't care
it's
how
the
close it
McDonald's
is to
around the
Hermes.
corner from Hermes.
What
Leave
did
me
you
alone.
get? What did you get?
I got nothing.
You just walked in to do a labour
I had
market
the
survey.
lobster risotto, okay? Good morning, Amaranth. Great restaurant.
Carry on.
Are you done?
I'm done.
Thank you,
I'm
John
so
Farrow
done.
with the data there. Now, on Inflation Wednesday, seriously, folks, we're seeing incredible nuance in the yield market. Right now, you don't know what to do in the equity market. I don't know what to do. John doesn't know what to do. Eric Friedman has a very nuanced view with U.S. Bank Asset Management and their chief investment officer. Eric, good morning. I love your research. And I want to start with just a simple call, as John just framed, with BMO and Brian Belsky catching up with you. You're at 4,600, up 11%. I want to focus on just up 11% from here. Are you lonely, or do you think a lot of people have that view?
Good morning, Tom. We are a little lonely here, and I think that the next couple quarters really test that 4,600 number for us. I think the one thing that's really positive is the momentum that came out of this past quarter's earnings. Lots of upside surprises on both revenue as well as earnings. So we think there is some scope for some upside revisions, but that transition from Q2 to Q3 will be really important to gauge.
I mean, what's so important here, folks, is it's so cold at Colgate University in the winter that everybody studies statistics to stay warm. Eric, I love in your note you talk about in-sample volatility. That's a fancy phrase for the internal dynamics of the market right now. What does in-sample volatility tell you about being a bull?
The biggest thing, Tom, is the composition of the market is changing, and it is at the margin right now, but to your point earlier from an earlier segment, the composition, if you will, in terms of the reopening trade versus more of the, let's call it steady state winners of technology and healthcare, those are things we're really gauging. So if you look, for example, at the UK, which Jonathan, of course, knows better than I do, that the compelling reopening is occurring, and the question is, will investors continually pay for what feels like a fairly well-known story, which is reopening is going to happen on a more gradual basis. So we do think that this shift back and forth across sectors is normal, although for the last couple of months it's been maybe a little abnormal. So we think this is probably a dip that's worth buying, but we should probably see a little more volatility before getting more excited.
We've caught up with a lot of people, Eric, that have talked to us about staples, pricing power, go to staples, BTIG, Morgan Stanley, others as well in the mix too. Do you share that view?
We do. We think, Jonathan, in fact, a really good conversation you had yesterday was on technology, their ability to maintain that pricing power. We think that there will be some substitution effects at the lower end of staples, but if you look at technology, what CFOs will spend on repeatedly, unlikely to have a lot of substitution. So we think that inelasticity will persist, and so that really leads us to think that technology is worth looking at here, given some of that ongoing pricing power in tech, as well as some select staples names as well.
What's really surprised me over the last several weeks are the obsessive talking points around inflation. And TK, I'm sure you've got a view on this as well. We've almost disregarded what happened with margins through Q1. Margins were fantastic, despite the fact there was price pressure, because some of these companies,
John,
Eric, got to pass on the costs.
Eric, jump in here, but John, my number one point is corporations adjust. That's my number one point.
And they did adjust. Now, Eric, I think the question is whether they can repeat the act in Q2, Q3, Q4, whether there is some margin risk.
I think so, Jonathan. If you look at especially CapEx trends, which we think will pick up, that's something that will start flowing through the income statement. If people are anticipating consumer spending, not just in the U.S., but also this glide path globally. And not that we want to have one more case of COVID, but as we've seen a gradual reopening, whether that's in the continent, whether that's in the UK, ultimately India, Latin America, that could provide a really diet for CapEx that persists, that could also challenge margins. So we do think that margins have some pressure. We'll see if investors keep paying up for it. We think that they will.
Eric, I want to talk about use of cash. I'm beginning to see the articles percolate in of what Lisa, John, and I have talked about, which is, you know what, they're going to buy back shares. Give me your view of the rest of the year and into next year use of this titanic profit the corporations are seeing. They've only got one path, the CapEx, yeah, I get it, but then we're going to see share buybacks as we've never seen before.
We've got a really large capital markets business, Tom, and talking to that team, that CFOs are really thinking about being more aggressive in terms of M&A and also continuing with share buyback. So that, funding is not an issue. People have no problems raising capital. There's lots of places where they can find it. So that's going to be likely something we see continue. Again, will likely be an ongoing bid to underlying equities, but don't expect that trend to roll over anytime soon.
John, did you get your 40-year Amazon piece? Did that trade happen?
I didn't. At 95 basis points over, I wasn't enticed.
Did PIMCO push you aside?
That 2-year piece, though, at 10 basis points over Treasuries, wasn't that something? Eric, it's amazing. We've just had an 8-minute conversation almost on the market, and we haven't talked about the Fed. Forgive me. Can we talk about the Fed? Does any of this play into the way you think about the equity market, Eric, going through summer?
No, it does. And Jonathan, to your point from your tweet this morning, that people like Richard Clarida is speaking, people like Lael Brainerd, these are stories that we're going to keep following and paying attention to, because at the margin there seems to be some very modest cracks in the foundation of we're not even thinking about raising rates. So as we see some more conversations develop about that inflationary pressure, which we can't, again, we think it's going to be more transitory, but we can't bypass the fact that the Fed may lose patience and in fact may change their stripes. So that's something we're very much paying close attention to.
Eric, I want to go right to Fear 101. I mean, this is the reality. There's a lot of people that feel they haven't participated in this bull market. They don't own the big tech, etc. Where do you place fresh capital now if you've missed out and you want to get on board, but you're scared stiff?
There's probably two places we prioritize, Tom. Number one would be domestic mid-caps. It really sits in that middle point, if you will, between momentum small as well as large cap, which of course has done very well. So that tends to be a very underloved and underfollowed part of the U.S. equity market. We'd be buyers there. For those that want to scale into pieces within the fixed income market, we still think that these are things you can actually own. These aren't esoteric parts of the market. So things like non-agency mortgages, those are spots where we still think you can capture some yield and not take on too much portfolio risk. So those would be two areas we pay close attention to. We also think, again, over time, that the ongoing bid from CFOs for technology will persist. So as that continues to struggle, that's a spot that investors can start picking away at.
Love that. Great to catch up. Eric Friedman there, US Bank Asset Management Chief Investment Officer. On the Fed speak, Rich Clarida, the Vice Chair, a little bit later. Tom will hear from Rosengren, we'll hear from Bostic, and I believe one more, Harker, a little bit later.
What are they going to say about inflation? I mean, I guess they wait. It's inflation Wednesday.
I think that's why these speeches are scheduled for some of them, Tom.
Yeah, they
see what they've got to say and how they respond to it.
Yeah, John, help me with football right now. It's like the end of the season. Most of the leagues is like 3 or 4.
Which league do you want to do?
No, but there's different leagues. I can't keep track of the leagues, John.
Well, neither can I.
Look, it's simple. American League, National League. Okay, simple.
That's baseball.
Football's not, soccer's not like that.
Yeah.
How late are we in the season? Like, we're here, right?
We've got 2-3 games left in most leagues across Europe. 2 or 3. Relegation's dealt with in the UK.
Right.
Now we've got to focus on those top 4 spots. Manchester City have won the league. Who qualifies for the Champions League? Will Liverpool miss out? Big question. Serie A in Italy. Will Ronaldo and Juventus miss out on a place in the Champions League? That's the race right there, and a really tight race in Spain with Atletico Madrid leading the way.
God, you like Maria Tadeo. It's
Well, Maria Tadeo is far better at this than me.
Now look, we really are focused on diversity here. And Abramowitz front ran us before she went away on her sabbatical.
What did Lisa say?
Abramowitz went out and hired an Arsenal supporter for our team. Did she clear this through you?
I have not heard about this.
I have not heard about this.
An Arsenal supporter. I thought she was an Arsenal supporter.
Yeah, that's why. What do you think she's doing here?
She's hiring Arsenal. Who's the Arsenal supporter?
We have Maxwell in London, who I'm told is an Arsenal supporter. I mean, this is un-American. It's not supposed to happen.
Very cool.
After the Super League, this should not happen.
Is Maxwell listening today?
I have no idea.
I have no idea because I have no idea what you're talking about. Do you want to talk about the market?
I guess so, but we got an Arsenal supporter. I'm not happy.
Okay, we can move on.
The market.
We can
Futures
talk about
-9.
claims. We could talk about CPI. Tom, we could talk about that massive monster job openings figure in America.
Yeah,
John,
let's talk
take
about
your
that.
pick.
On radio, folks, a chart, and it is the chart of the moment. John's 100% correct on that. John, moonshot covers it.
Just
out of the pandemic,
unbelievable.
it's a true moonshot. And I don't know, email us in, folks. We're living it in New York City.
Do you think this is something we solve with time? Just several months? Or is this an educational issue like Harm Banholtz was talking about? Is this a price issue? A labour market price issue? A UI issue?
It's a natural disaster issue. We're coming out of a natural disaster. But what's fascinating here, John, is what is the power of labor to demand higher wages? And that's a mystery. Anybody who says they got a theory, I'm not interested. We need to observe what wages and benefits do, particularly in I'd say the 3 or 4 lowest deciles out there.
I think it's pretty clear that the economics profession nailed the demand picture, really got a decent gauge of demand,
yes,
and has really struggled to understand whether supply can meet it.
Yeah, it can be that way. And with commodities, look at copper today. I mean, even copper had another lift today.
Transitory. I've heard that once in 40 minutes.
I know.
Are you impressed? Going into an inflation number at 8:30 Eastern Time, you're going to hear that number a whole lot more throughout the afternoon.
Wednesday.
And that word repeatedly. Transitory. In your equity market, 41.37. On the S&P 500, we declined 0.2%. With Tom Keene, Jonathan Ferro, and a hello to Lisa Abramowitz, who we have no idea where she is. She's going to be back on Monday.
With the First Word News, I'm Ritika Gupta. The White House is facing rising pressure over gasoline shortages caused by the shutdown of that giant pipeline. The EPA has waived requirements across 12 states and Washington, D.C. to help bring more fuel to areas normally supplied by the Colonial Pipeline. North Carolina and Virginia declared states of emergency as gas stations ran dry. More than 100 Republicans reportedly are threatening to leave and form a third party. A statement is expected to take aim at former President Trump's stranglehold on the GOP. The New York Times says the group is headed by Miles Taylor, a former Trump blasting the administration. Taylor says those who will sign a statement include former governors, lawmakers, and former governors Tom Ridge of Pennsylvania and Christine Todd Whitman of New Jersey will sign it. In the UK, that an investigation into his government's handling of the pandemic will be set up. Criticised for a number of things, including waiting too long to impose lockdowns, but Johnson is now